Hello viewers, welcome to my channel. I am Hasham Ali Khan. So now I am starting the next problem on deductions from GTI. Already 3 problems I have completed in the last video. Now 4th and 5th problem I am going to complete in this video. So before starting the next problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready. And take a screenshot of the solution of 4th and 5th problem, then I'll explain each and every point of these problems. Come on. Now 4th problem. Srimati Vani submitted the following particulars: compute total income and tax liability. Salary 35,000 per month. We have to compute income from salary. Then loss from self-occupied property. There is a loss in income in house property. Income from other sources 2,96,000. So 3 incomes: income from salary, house property, and other sources. Contribution to pension fund of Birla Insurance Company. When an SSC contributes for pension fund, deduction will be allowed under section 80CCC. Then profession tax paid. Profession tax paid will be allowed as deduction under section 16(3) while calculating income from salary. Then contribution to PPF, Public Provident Fund. Deduction is allowed under section 80C. It's a qualified saving. Then repayment of house loan. This is also a qualified saving under section 80C. So 2 items are coming under 18C. 80C, that is contribution to PPF and repayment of house loan. Payment to 8-year daughter's Sukanya Samriddhi account, SSA. This also qualifies for deduction under section 80C, qualified saving. So 3 items we have seen which qualify for deduction under section 80C. What are the 3 items? Contribution to PPF and repayment of house loan and Sukanya Samriddhi account. Amount deposited in Sukanya Samriddhi account. These 3 items will qualify for deduction under section 80C. Then medical insurance premium. This will be allowed as deduction under section 80D. So medical insurance premium on own health 8,000, on her husband health 7,000, and pre-medical health checkup expenses 5,000. All the 3 are allowed as deduction. If nothing is given, we assume that it is paid through check and it is allowed. If it is paid in cash, it will not be allowed. Nothing is given, we assume it is paid through check. So own health medical insurance premium fully allowed. Spouse health. If an SSC has taken a medical insurance policy on spouse, that will also be allowed. And pre-medical health checkup allowed. That's all. So 3 incomes we have. This is Vani. Computation of total income of Srimati Vani for the assessment year 2021-22. Salary income. Basic 35,000 per month. It is given 35,000 per month into 12. 4,20,000. We don't have any other allowances or perquisite or profit in lieu of salary. Only basic salary we have. That itself will become gross income from salary. Now from gross income from salary, 3 deductions are there under section 16. That is 16(1)(a), 16(2) and 16(3). These are the only 3 deductions we have income from salary. 16(1)(a) is the standard deduction, compulsory deduction, 50,000. This 50,000 standard deduction is compulsory for every person who is having income from salary. Second, EA deduction under section 16(2), that is not there. Because when entertainment allowance is received, then only EA deduction under section 16(2) will be allowed. We don't have EA, we don't have EA deduction under section 16(2). Section 16(3), profession tax paid, that is given in the problem. The profession tax paid is allowed as deduction under section 16(3), 2,500. Over. From gross income from salary 4,20,000 minus 50,000 minus 2,500, 3,67,500 is the income from salary. That's all. Now, house property. There is no income from house property. There is a loss from self-occupied house. The loss from house property can be set off from other heads of income. The loss from self-occupied house, this will be deducted minus bracket. Loss hai, that's why bracket. So 27,500 deduct, we'll get 3,40,000. To this we add income from other sources, that is given 2,96,000 over. Now you take the total, 340 plus 296, 636 is the GTI, gross total income. From GTI, deductions will be allowed under section 80. First, qualified savings under section 80C, sorry. Qualified savings under section 80C. In our problem, three amounts are there. Amount deposited in PPF, that will qualify. House loan repayment, that will also qualify. Amount deposited in Sukanya Samriddhi account, SSA, that will also qualify. So three items are there, 21,000, 34,000, 12,000. 67,000 is the deduction under section 80C. Now contribution to pension fund under sections 80CCC. So any amount deposited in pension fund will be allowed as deduction under section 80CCC. So 15,000. Last one is medical insurance premium paid on own health, on spouse health, and preventive medical health checkup. All the three will be allowed as deduction. 20,000. Now take the total. 67,000 plus 15,000 plus 20,000, 1,02,000 are the deductions. So from GTI, 6,36,000 minus 1,02,000 will get 5,34,000 total income. That's it. We have computed the total income. Now it is also asking you to calculate the tax liability slab, income, rate tax. First slab, basic exemption limit, 2,50,000. Up to 2,50,000, income 250, nil. Second slab, 2,50,000, 1 to 5 lakh. Income comes to 2,50,000, 5%, 12,500. Now next slab will be 5 lakh, 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is only 5 lakh, 34,000. So I'll take the balance. So 5 lakh 34 minus 5 lakh, you'll get 34,000. So 20%, 6,800. So tax on total income, 19,300. This is the tax on total income. To this we add health and education cess, 4% as usual. So 20,072. Now rounded off to the next 10. So here 72. 72 will be written as 72 rupees you ignore. So 20,070 is the tax liability rounded off. That's it. This is the end of problem number 4. Now I am reading out to the problem number 5. Compute total income and tax liability of Mr. Sunil, resident and senior citizen. Remember this point. Senior citizen means the basic exemption limit is 3 lakhs. Non-senior citizen, 2,50,000. If nothing is given, we assume non-senior. If specifically given senior or super senior, then we take like that. Here it is given senior citizen. So remember 3 lakh, basic exemption. Income from salary computed. That means no need to compute. Directly we can take income from salary. Similarly, income from let out house computed, loss from self-occupied house computed. So they have two houses, one let out house, one self-occupied house. There is income from let out house and loss from self-occupied house. We can set off, intra-head set off. The loss can be deducted from income. Then income from other sources, 2 lakh. Medical insurance premium 10,000 and pre-medical health checkup expenses 3,000 paid in cash. So medical insurance premium and preventive health checkup expenses both are allowed as deduction under section 80D. But the rule is medical insurance premium should be paid through check. If it is paid in cash, the medical insurance premium will not be allowed as deduction. Whereas preventive health checkup expenses can be paid in cash, can be paid in check, it will be fully allowed. So in our problem, medical insurance premium 10,000 will not be allowed because it is paid in cash. Preventive health checkup expenses 3,000, that will be allowed. Even if it is paid in cash, it will be allowed. So preventive health checkup in cash also allowed. But medical insurance premium, if paid in cash, not allowed. Next one, contribution to pension fund, LIC, paid in cash, 18,000. Amount contributed for pension fund in LIC will qualify for deduction under section 80CCC. Even if it is paid in cash. No restriction that it should be paid through check. Only for medical insurance premium that is there. For amount deposited in pension fund, even if it is paid in cash, allowed. Next one is interest paid on son's education loan. Deduction will be allowed under section 80E. Next, donation. Donation given will be allowed as deduction under section 80G. So here it is given 100% deduction, 9,000 rupees, and 50% deduction, 14,000. That's all. This is the complete problem number 5. Now see the solution. Computation of total income of Mr. Sunil for the assessment year 21-22. Income from salary computed, directly given. Computed word is given, directly I have taken. Then income from let out house 84,000, less loss from self-occupied house 36,000. 84 minus 36, 48,000. Intra-head set off within the same head. Income from other sources 2 lakh. So total gross total income 6,77,500. From this GTI we deduct the deductions under section 80. Medical insurance premium paid only 3,000. 10,000 rupees जो cash में pay करे, that is not be allowed as deduction. Only preventive health checkup expenses is allowed even if it is paid in cash. Contribution to pension fund of LIC under section 80CCC 18,000 fully allowed even if it is paid in cash. Then interest paid on son's educational loan under section 80E fully allowed, whatever interest paid. Then donation under section 80G. 100% donation of 9,000, complete 9,000. And 50% rate of donation 14,000. So 50% of 14,000 is 7,000. Take the total 9,000 plus 7,000, 16,000. Now take the total of all deductions. 3,000 plus 18,000 plus 31,800 plus 16,000, 68,800. 68,800 is the total deductions under section 80. Now subtract. 6,77,500 minus 68,800, 6,08,700 is the total income. That's it. Got the total income. Now we have to find out the tax liability. Slab income rate tax. Slab. The first slab is 3 lakh. Why 3 lakh? Because the SSC is a senior citizen. First line it is given. The SSC is a senior citizen. That's why the basic exemption limit is 3 lakh, not 2,50,000. So up to 3 lakh rupees income nil. Second slab, 3 lakh 1 rupee to 5 lakh. So it comes to 2 lakh rupees income. On this 5%, 12,500. Next one, balance. The next slab goes from 5 lakh 1 to 10 lakh. But our income is not 10 lakh. Our income is 6 lakh 8,700. Not going up to 10 lakh. So I am taking balance. So 6 lakh 8,700 minus 5 lakh. You'll get the balance 1 lakh 8,700, 20%. 21,740. Tax on total income 31,740. To this we add 4% health and education cess. Tax liability 33,010. That's it. It is asking you to calculate the total income and tax liability. I have calculated total income, tax liability. Now in working note you can write medical insurance premium rupees 10,000 paid in cash is not allowed as deduction. Whereas preventive health checkup paid in cash, it is allowed as deduction. Secondly, contribution to pension fund is allowed as deduction as section 80CCC even if it is paid in cash. That's it. So I have completed fourth problem and fifth problem. Come on. Now see the sixth problem. Problem number 6. Sri Shiva Shankar submitted the following particulars: compute total income and tax liability. Salary received 3,85,000 after deducting income tax 20,000 and professional tax 3,000. That means this 3,85,000 is given after deducting 20,000 and 3,000. We should not deduct income tax. We should not deduct professional tax. So whatever is deducted, we add back. Add back to Salary. So here, computation of total income of Mr. Shiva Shankar for the year ended 31st, for the assessment year 21-22. Salary received 3,85,000 is given. Whatever is deducted, we add back. So add back income tax 20,000, professional tax 3,000. So gross income from salary will be 4,08,000. From gross income from salary, deductions are allowed under section 16. 16, 1A, 16, 2, 16, 3. Only 3 deductions are there. But in our problem, first of all, compulsory deduction, standard deduction. Under section 16, 1A, 50,000. So this is the standard deduction, compulsory. It will not be given in the problem, but we must know. Whenever we compute income from salary, deduction under section 16, 1A must be given fixed amount 50,000. Second, 16.2 is for EA deduction, but we don't have EA. Entertainment allowance, if there is EA, then EA deduction will be given. But there is no EA, so there is no question of EA deduction. But professional tax under section 16.3 will be allowed. How much professional tax paid? 3,000 rupees is the professional tax paid. That will be allowed as deduction. The professional tax paid 3,000. So 50 plus 3, 53,000 deduct. 4,08,000 minus 53, 3,55,000 is the salary income or income from salary. One head completed. Next one given is rent received 1 lakh, municipal taxes paid 18,000. When rent is received, it is taxable under the head income from house property. Last problem I have shown you how to compute the income from house property. First we take gross annual value. The gross annual value is the higher of the 3 amounts. Municipal rental value, fair rental value, actual rental value. Municipal MRV, FRV, ARV. Higher of these 3 is called GAV, gross annual value. But in our problem, we are not given municipal rental value. We are not given fair rental value. We are given only actual rent. What is the actual rent? Rent received 1 lakh. So whatever actual rent is there, that itself is the GAV. So gross annual value 1 lakh. From GAV, deduction will be given for municipal taxes paid. Here municipal taxes are 18,000. Deduct 18,000. So net annual value NAV is 82,000. Now from net annual value, only 2 deductions are there. 24A, 24B. 24A is the standard deduction, which is 30% of NAV, compulsory. So whenever we compute income from house property, standard deduction 30% of NAV, that is under section 24A. So standard deduction under section 24A, 30% of NAV, 24,600. So one more deduction is there, 24B. That deduction is for interest paid on loan taken to purchase the house or to construct the house. But in our problem, we are not given interest on loan. So we are not taking 24B. Only one deduction we are allowing, that is standard deduction. So income from house property, we got 57,400 income from house property. Now, short-term capital gain on sale of diamonds and long-term capital gain on sale of jewelry. So we have income from capital gain. So I've taken here capital gain. STCG, short-term capital gain on sale of diamond, and LTCG, long-term capital gain on sale of jewelry. Both are capital gain. So I'm taking the total 1,35,000. Now you add up income from salary 3,55,000, income from house property 57,400, and capital gain 1,35,000. Total gross total income GTI 5,47,400. From GTI, deductions are allowed under section 80. Now see what are the deductions available to him. First one, medical insurance premium for himself 10,200, for wife 7,000, mother age 72 years is 19,000. The medical insurance premium paid on self life or on spouse wife or parents wife, all are eligible for deduction under section 80D, medical insurance premium. Then deposit of 35,000 with UTI for the benefit of his youngest son who is completely blind. When the assessee incurs expenditure on a relative who is dependent on him and he is completely disabled, physically or mentally disabled, then deduction will be given under section 80 DD. In the last theory video I have explained you, section 80 DD is the deduction for the assessee on whom one relative is there who is dependent on him and he is physically or mentally retarded. Then the deduction is, if normal disability is there up to 80%, 75,000 is the deduction allowed. If there is severe disability means more than 80% disabled, in that case 1,25,000. And when it is given blind, when the handicapped person is completely blind, it is called severe disability. And for severe disability, 1,25,000 rupees is the deduction, fixed amount of deduction under section 80 DD. Then deposit with LIC for pension scheme 24,800. Deposit under pension scheme, deduction is allowed under section 80 CC. Pension scheme 80 CC. He has undergone treatment for a chronic disease and spent 80,000. When the assessee is suffering from some chronic disease and getting medical treatment, expenditure incurred on medical treatment, deduction will be allowed under section 80 DDB. This 80 DDB is applied when the assessee himself is suffering from some chronic disease like AIDS, cancer, etc. Income Tax Act has given the list and he has spent some amount on medical treatment. Deduction will be allowed. Fixed amount of deduction 40,000 rupees irrespective of the amount spent. That's it. The complete problem I have explained. GTI we got for you. Now deduction, deposit with LIC for pension scheme 80 CCC 24,800. Directly whatever is given in the problem, same thing, fully allowed. Then medical insurance premium under section 80D. So medical premium paid on self health, on wife's health 17,200 plus on the mother, that means medical insurance premium paid on the life of the mother, on the health of the mother 19,000. The total deduction allowed is 36,200. Next, medical treatment for dependent handicapped person 80DD. That means the assessee is having a relative who is dependent on him and he is mentally retarded or physically handicapped. In that case, a deduction will be allowed 1,25,000 because severe disability, blind. When the person is blind, it is called severe disability and 1,25,000 deduction. Medical treatment for self under section 80 DDB. The assessee is suffering from some chronic disease and medical expenditure incurred 40,000 rupees irrespective of the amount spent. Take the total 2,26,000 deduction. Deduct 547,400 minus 226, 3,21,400 is the total income. That's all. So I have explained you about the total income. Now, calculation of tax liability. Before starting calculation of tax liability, take a screenshot of these calculations. Then I'll explain about how to compute the tax liability. Now see, calculation of tax liability. How much is the total income he got? 3,21,400 is the total income. On this total income, how much is the tax liability? Total income is 3,21,400. But here in this problem, we have special income and normal income. What is the special income? The income on which there is a flat rate of tax. Here the income is LTCG, long-term capital gain. The total income we got 3,21,400. In this 3,21,400, LTCG is included. How much is LTCG? On shares 75,000. 75,000 is the LTCG on sale of jewelry. And this is special income on which flat rate of 20% tax. And remaining income will be normal income. So we segregate. In this total income, we segregate into special income and normal income. So total income is 3,21,400 minus LTCG 75,000. So normal income comes to 2,46,400 is the normal income on which slab system will apply. But the basic exemption limit is 2,50,000. Here the normal income is 2,46,400. So we can say the normal income is less than the basic exemption limit. The normal income is less than the basic exemption limit. So we calculate deficiency. The basic exemption limit 2,50,000 minus normal income 246,400. There is a deficiency of 3,600. And this 3,600 deficiency should be deducted from LTCG. And the remaining LTCG is taxable at a flat rate of 20%. So here, this deficiency of 3,600 should be deducted from LTCG. Taxable LTCG, 75,000 minus 3,600, 71,400 is the taxable LTCG, on which there is a flat rate of tax of 20%. So here, tax on LTCG, 20% of 71,400, 14,280. This is the tax on LTCG. But the income is below 5 lakh. The total income you can say 3,21,400. The total income is below 5 lakh rupees, so tax rebate under section 87A is allowed. So all these provisions you have to remember. So when the total income is below 5 lakh, tax rebate under section 87A is allowed to the least of the following two: actual income tax or 12,500, whichever is least. The actual income tax is 14,280. 14,280 or 12,500, whichever is least will be allowed as deduction. It will be allowed as tax rebate. So tax rebate under section 87A 12,500. Deduct 12,500, 1,780 is the tax. To this we add 4% health and education cess, 71 rupees. Total tax liability 1,851. The tax liability is 1,851. But in this problem, advance tax already paid by the SSC in the beginning it is given. Income tax 20,000. The SSC has already paid income tax of 20,000. That advance tax paid will be deducted now. Advance tax paid 20,000. So 1,851 is the tax liability. Actually, his tax liability is 1,851. But already he has paid 20,000. Excess he has paid. More he has paid. Then income tax will refund it. The income tax will make refund. The refund of tax 1,851 minus 20,000, you are getting minus 18,149. There is no tax liability, but there is refund of income tax. Income tax will return back to the SSC because SSC has paid more tax. So 18,149 rounded off to the nearest 10. So 49 can be taken as 50. So 18,150 is the refund of tax by the income tax department to the SSC. That's all. This is a complete solution of 6th problem. Now some working notes. In working notes you can write, since total income is below 5 lakh rupees, so tax rebate under section 87A is allowed to the least of the following two amounts: actual income tax or fixed amount of 12,500. This 12,500 is given by the income tax rules. So whichever is least, 14,280 or 12,500. 12,500 is allowed as deduction. Secondly, deduction under section 80 is given 17,200 plus 19,000, 36,200. Actually the limit is 25,000. But if the parent is senior citizen or super senior citizen, it is increased up to 40,000. So here 36,200. Since his mother is a senior citizen, so deduction can be given up to 30,000. Up to 30,000. So total 36,200 is the total deduction allowed under section 80D. Next, if a person is blind, the disability can be treated as severe. In this problem it is given, the SSC is having a relative dependent who is blind. Blind means severe disability. When there is severe disability, the deduction under section 80DD. 80DD deduction. Severe disability, more than 80% disability, 1,25,000 fixed by the income tax department. So 1,25,000 deduction will be given under section 80DD. Similarly, 80DDB. If the assessee is suffering from chronic disease and getting a treatment, medical treatment, then deduction will be allowed under section 80DDB for an amount of rupees 40,000 fixed, irrespective of the amount spent. Whatever be the amount spent on medical treatment, ignore it. The fixed amount 40,000 is given by the Income Tax Act under section 80DDB. So 80DDB 40,000. That's it. So this is the end of problem number 6. Totally 6 problems I've completed. The next problem, inshallah, we'll do it in the next class. So if you're satisfied, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And one more thing, I want to inform you that I have started a new channel by name Khan's Accounting Institute. This channel I have prepared for IGCSE students. The videos are particularly for IGCSE students, but anybody can watch the video and enhance the knowledge. So I suggest you to visit the second channel, Khan's Accounting Institute. That is the channel name. Do watch the videos there, enhance your knowledge, and subscribe my second channel also. Inshallah, we'll continue this next problem in the next video.